Good evening, everybody. Still here, Daily Market Pulse, Tuesday, January 14, 2014. So, stocks rebound. We talked yesterday, the possibility, critical point, markets could bounce, depending how high, weren't sure. You never quite know. But so they did. But they also did so in lighter volume. So not super convincing. The selling was clearly there yesterday, institutionally. Today, nice bounce, but then again, distribution days remain the same. Based on where where the index is closed, it's encouraging. Some might say that the uptrend has resumed. I want to see a little more than this. I want to see a little better action than this to prove that. So anyway, let's take a look at the indexes at this point and judge it from there. Okay, Dow Jones, we had said, we had broken down through the window, came into the 20 moving average at this point, could see a bounce back up. If it's going to remain bullish, it's got to get up and over the 8 moving average and all the way back up through the highs and then even higher. So, of course, the trend is still intact. All the ultimate intermediate and longer-term lows and highs are all going higher. We know that. This is a short-term downtrend naturally, but that was a pretty vicious sell-off day yesterday. With high volume, it's to me it seems like it's beyond profit taking, but we'll see. We'll see, of course. One day up it doesn't mean a whole lot, so we'll see how it goes. Not quite yet oversold in my opinion either, so we'll see how it goes. But it's back essentially at the window of change of polarity. It's really all it's done, right? So let me zoom in here a little bit better. So let's do this on the Dow. See, that's the polarity. That's the window. So it's back at the window. That's all it's done. So it's changed the polarity and then back to test it. So now what does it do here? Does it snap back in? This could be a crack and snap of sorts potentially. If it snaps back up and over and closes, then it's immediate buy. But right now, I'm going to say it's not until proven. So let's go forward. Let's look at the S&P. Now you're seeing the S&P. Let's see, there was a window, of course, across here, but that window was really irrelevant. It's really the support below. So it came right into that polarity area down below here at 1815 and bounced off of there to come right back up, but did not make a new high and did not close beyond the open either. So it's got some work to do yet. So this is what it's contending with right now. I'm going to make this so everyone can see it real clearly, right? And I'm going to make it red as well. And then we'll make it pretty thick just because there's a little bit of resistance there. We're doing it like that. So that's what you're dealing with right now. So it's a nice bounce, certainly, but it's more sideways than anything else. And we'll see what the next move is. So now next is the Nasdaq. Okay, so Nasdaq, we had talked kind of the same thing. There's a window across the bottom. Now, the Dow, of course, it cracked below it, right? We already know it cracked the support. This one has not. It's going sideways purely, so it bounced off that. The 20, the window, we knew that was going to be a decent support. It was a question of how high. Would they take it all the way through? They have not. They took it right back to resistance once again at 41.85, and that's about it. So now we see. What do they do from here? There's still a negative divergence that exists on the stochastics here. Has it been materialized with yesterday's sell-off? I'm not convinced of that either. It's possible that this thing is truly negative. It's got more downside. We'll see if this is the start of a rollover or not. This is the beginning. So it's got to break above 41.85 and close at or above 4,200 ideally for this to be truly bullish once again, or you're looking at below the support level from yesterday. Okay, so let's look at the TSX. So the TSX for our Canadian friends, we had a nice push up. We talked about that before. It came up, it retraced back to the polarity area, bounced even higher right into the 1272 extension. Reversed with a dark cloud cover. It was a decent at this level. You'd think, okay, it could be that way. Now you've got a shooting. A shooting star. You have a shooting star that's developed also right next to the dark cloud cover. So back-to-back sell signals coming right off the 1272 extension. It's clearly some sell signals. I still think you'd like to see some red candles to the downside to truly confirm this real selling here. But yesterday's selling in high volume might have been enough at this resistance level regardless. So we'll see if that's the case. Back to the 8 moving average for sure would be the support down below. That's the target. It was 13,700, and then below that you're looking at the next level, 13,500. US dollar, Canadian dollar, after a slight little pause, upper shadow and then a dark cloud cover, immediately reversed, but again, not really clearing the highs as of yet over 110, but still pretty strong overall in the US dollar. It is overbought, so just be careful. This might, this is like the last 3 days is literally a 3-day range bound here. So don't be so overly optimistic that this goes any higher necessarily, so be careful of that. Let's look at Treasuries. So Treasuries, we said, into this area of 131, some change, might be looking for a little bit of a pullback. Sure enough, there's room now down to 130, into the 50, the 8 moving average, etc. So I'd be looking for that next. It's possible it consolidates very slowly, or it could sell off kind of hard. It's hard to tell. Okay, so that, but you're still looking for more upside ultimately because it still looks very, very bullish. You're looking at the 131, 132 range for now. Japanese yen's probably worth looking at. It came through the former support, which was now going to be resistance. It came through, then it just plummeted, but right back again to moving averages. In my opinion, will be support. So this will be a test. It was a nice move to the upside, a severe selling. Of course, the overall downtrend is still intact naturally. This is not a perfect scenario, of course, for the upside just yet. So this could go choppy sideways to slightly up in the sense because the moving averages are still so wide. So if it could stay choppy to some degree, then you're looking at some kind of a rounded bottom perhaps forming here. So we'll see how that goes. Gold here, for the most part, inconclusive. It's at a former pivot area, if you will, kind of a next target area, 1250. Retraced a little bit back toward the 8 moving average. So it's right between now the 50 and the 20, and almost right now, of course, between the 50 and the 8 for the time being, naturally. The shorter term trend is still to the upside. Obviously, it needs to get back over 1260, 1265 to have more strength, possibly in bullishness, to get back toward 1300 or more. Right now, it's consolidating. I think that's all it's really doing, looking for more upside ultimately as well. Crude had a good bounce, so it came down, of course, big sell-off, had a little bit of a bounce. I wasn't real thrilled by the bullish move that it had a couple days ago. I thought it was okay, decent, but it retraced some, so I didn't think it was that convincing. So the fact that it came with a red candle on Monday was not surprising, but it came back to retest support right at 91.50, and it bounced beautifully today. Not getting through 93 yet, so 93, 93.20-ish will be key, I think, to get through that. Then it's got a better shot of going higher. So once it gets over the 8 moving average, over 93.20 and some change and so on, then it's got a better shot to go back toward 95, and then ultimately, of course, maybe 99. That could take some time, of course, but right now it's looking like it's attempting a bullish push off this level. Otherwise, if you're looking for something on the bear side below 91.50, then you're going, of course, further downside on crude. Okay, small caps, IWM here, representative of the Russell. So this is the risk on to me, right? So you've got the window right there forming resistance, a little bit of a pop through a couple days back. That was actually Friday, but there was a bigger resistance above at 116. It retraced, obviously, we know, much deeper yesterday, came into the 20, near a pivot area near 113. So plenty of support there. Of course, that's why the bounce. Right back, though, to 115, 115 and a half, and still below 116 and sideways. Nothing convincing here to the long side as of yet here either. So we wait and see if they break 116 or they start making their way back below 114 and even lower. So we'll see how that goes. All right, let's look at the VIX next. Okay, so the VIX holding support here near $12, bounced beautifully yesterday back toward the 20, the 50-day moving average as well, got over the 8 moving average at least partially, and then retraced back today. But again, look at it, it's not going any lower than 12, held reasonably well. So this also is not that convincing that this is going to stay down here. So this could just as easily do what it did yesterday and higher, and the markets could just fall apart. So this is still dicey to me for the markets. It looks great. We knew the bulls were present. We knew because the trends are there. They've historically have continued to drop a little bit and then immediately bounce back and go higher. But these distribution days are so high right now that it just seems to me, I'm just leery, just very leery. And the put-call ratio is at levels that I've never seen forever. It's so low. It has been low, for that matter. In fact, to the point where I'll show you, you can see the top third of this is the put-call ratio. This is a 5 exponential moving average of that put-call ratio. And so to give you the perspective, you can see how low we dipped here on the put-call ratio, and markets were slightly rolling over and came down just a little bit. Now you've got a divergence. Now you've got where this is rising, prices are still going sideways. Of course, if the put-call ratio ever gets up above 1, then you've had significant selling to where now you're looking at a bounce and you're looking for a reversal, just like we saw over here. So once it gets over the 1 mark and we're seeing this massive selling, all we're looking for at that point is some kind of reversal. We're looking for some kind of a candle that's going to show us a reversal, plus the VIX being up and over the upper Bollinger Band simultaneously. So it works really well on bottoms. The tops don't work near as well. I wish they did, but they just don't. But nonetheless, you see the VIX is very low. Markets are going sideways near their highs, and the put-call ratio is looking very low, near 70. So that's why everything, plus the distribution account, is very high. So it just seems like everything is pointing toward a market correction. But we'll see. We wait and see. That's all we can do. You're long still until proven otherwise, for the most part. All right.